Jason, you mentioned if we get the consumer right, we get the economy right. A lot of the strong economic data we've been seeing has been driven by consumer spending this year, as you mentioned. And that's sort of been attributed to the consumer feeling good, both sort of from, pandemic stimulus that they still had in their bank accounts, as well as a strong labor market. Talk to us about the labor market and what you're seeing, if you will. We've seen some softening there, certainly not a huge shift, but talk to us about the trends that are starting to develop with the labor market, please. And you're muted.
Sorry about that. That's a rookie mistake this far post-pandemic. So it's a great question. And overall, the labor market in the US remains healthy, but we do see some cracks beginning to form across hiring momentum, job openings, survey data, wages, and more. The job market is slowing. It's normalizing, I think, is a better way to think about it. We can also see this normalization on the labor supply side, which has finally risen over the past couple of quarters as more folks enter the labor force, which of course is a good thing as well. We need that for economic growth. Importantly, unemployment is beginning to rise as well. It's about 0.5% off of its cycle lows. We're at 3.9% today. We were at 3.4% at the cycle lows, which, by the way, was like a 55-year low. And while it's reasonable to say, well, that doesn't seem like much, it's only 0.5%. This is the way that it acts every time right before a downturn. The Fed thinks they can generate a soft landing. Economists are hopeful. But ultimately, higher rates hurt the economy, and the new direction of rising unemployment keeps going, and it sets off this negative tailspin until it places us into recession. The average rise of joblessness in recession is about 3.5% off those cycle lows. And if that were to occur this time around, that's about 7% unemployment. We've certainly seen worse, to be sure, but that would be a downturn. And so we're watching that normalization and that softening of the labor market closely to see whether or not it stops at just right or whether it continues to feed on itself. And the Fed's watching as well.